With world-class expertise and local insight, Dexus creates value not just for today, but long into tomorrow.
From Barangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Well, hello, and welcome to the COB. I'm Nadine Blaney-Juliet. I haven't had a chance to be on air over the past couple of days, and I just couldn't resist joining you for the COB.
Absolutely, and Nadine, thanks for joining on a momentous day when we have seen this sell-off exacerbate. 104%, of course, impact extra tariffs going through, or the total tariffs into China. Very much seeing the market hit hard, so it does look like we are closing towards the session lows, down 1.7%. The ASX 200 has fallen by as much as 2% in the afternoon trade, currently down 1.9% as we head off into match-off, and a big hit to healthcare stocks as well, which we'll get to in a moment.
Yeah, we've got E-minis in the United States, so when we say that, we mean US futures, and they've exacerbated their losses as well, down by 2.3% for the NASDAQ, and the S&P 500 off by 2.3% as well. Of course, we are heading to the London Open, so we'll be keeping our eyes peeled for any news coming there. But we have heard from the German finance minister just in the past 20 minutes or so, saying that trade tensions bring undoubted risk of recession.
All right, so let's bring it to the themes of the day that we are really discussing amid this market meltdown. And you know, sometimes you like to give 100%. Trump's giving 104% to China, and certainly that is why we are seeing, as we mentioned, this weakness coming through. The healthcare hit as well. Now, we thought pharmaceuticals were actually going to be exempt from the tariffs. Trump did indicate in a speech overnight, morning our time, that they are going to put some of these tariffs on to the pharma companies. So CSL's fallen by something like 5%. Mark Gardner, our guest today from MPC Markets, has a very interesting point on that. So he will talk us through that in a moment. And then, of course, it comes through to what does it mean for rates? We've seen the RBNZ cut today, which was expected. We've seen the Central Bank of India cut as well. And the forecast for rate cuts aggressively here. We talked about Deutsche Bank joining the 50 basis point call yesterday. I spoke to Warren Hogan, who's sort of sometimes been a bit of an outlier, hasn't he? And he even made some commentary last week that if the tariffs are very inflationary, does that mean central banks have to increase rates? Well, today he's very firmly in the camp that they will cut the RBA by 25 basis points.
How can you not cut when you've got real fears of a global recession? Look, before we get too dire, I just noted something come across my screen saying JP Morgan is eyeing copper and gold for some opportunities as we continue to see this weak market, to say the least. So look, let's get a look at some of the sectors and how we're seeing the performance go. We've got the health names, as you've just alluded to, down significantly. So you could say, well, these aren't necessarily pharma companies, sure, but it's the sentiment, it's the destruction of positive sentiment that can take the wind out of the sails of a whole sector. Just on that news.
All right, having a look at the energy sector as well, of course, hit very hard. Crude oil, something like 20% down since, only in a week since the tariffs, of course, came into effect, so-called Liberation Day. What does this mean for global growth, for demand for oil if we see a recession? Woodside Energy down by 3.3%.
Yeah, don't forget we're seeing U.S. Treasuries continuing to extend their losses. So, a sign that investors are dumping even their safest assets. So we've got alarm bells really sounding, and that's having an impact across the spectrum. You can look to the miners. Of course, China standing firm against the United States, saying that it will not be economically bullied by the United States, but still it does raise questions as to just global demand for these minerals resources that we are so blessed with here in Australia.
Absolutely. All right, let's just have a quick look at some of the corporate stories. I mean, we touched on why BHP is lower. Nickel Industries, of course, base metals coming under pressure, and it's actually plunged to a 5-year low today, down 13.3%.
Yeah, we have GQG Partners reporting a close to 2% increase in funds under management over March, but on the flip side, Regal Partners has fallen on lower funds under management, down by about 12%. So Regal has oft been linked in the press lately in regards to its Opthea bet, which obviously went sour there.
And a small cap, we just spoke to, Andrew just spoke to them, Calix, they actually rose by almost 4%. You can find that interview online once one of our sub-editors gets to it.
Yeah, okay.
And that is quite an interesting stock there, up 3.7% because it looks like it might be exempt from tariffs.
Look, sorry, Jules, Bitcoin's down, we've got the dollar down, we've got it all happening out there. Let's get some analysis with Mark Gardner, who's joining us from MPC Markets.
Good afternoon.
Yeah, boy. Where does this stop?
I think we're probably around about peak panic today, obviously with the day coming around. I honestly, I think if you go and dig into the numbers about, the import-export numbers, etc., Trump thinks he's got far more leverage than he actually has. I think the USA needs China far more than China needs the US, to be honest. I think the Chinese have been pretty relaxed about this so far. And I agree with them putting on the reciprocal tariffs in response, and from what I've seen today and from what I've read today, there's no one really in China that seems to be overly concerned about it because they feel as though it's far more damaging to the USA than it is to China. So,
and I think Arthur Sinodinos, I can never say his name, said that too.
Yeah. So realistically, I think it's going to get to a point where Trump's going to have to scramble to get a deal done, or otherwise he's going to be embarrassed. And I don't think his ego is going to let him do that. So he's been offered deals, obviously, already from the likes of Europe. I think he was trying to get China over the line beforehand. But the art of the deal could blow up in his face here a little bit. But as far as the healthcare names go, the panic there is way overstated. I mean, you're looking at, say, Cochlear, which is 60% of the market in market share in their particular device, and it's market leading as well. I think it's only really price that is the reason they're not probably 80 to 90%. And CSL as well is well over 30% of the blood plasma, and that they're worried about that. The 1.6 billion in revenue coming out of Melbourne, but the thing with healthcare is it's a need. It's not a want. Like it's not. We're not talking about designer handbags here. We're talking about if you need blood plasma to do research, or if you want to hear again, you're just going to cop the tariff because it's a necessity for your health. So I really don't see there being any drop in demand, and I think it's traditionally a very defensive sector. So it's the sort of thing you want to be trying to pick up. We've been buying CSL today, just adding to that position. And there's been a few other names we've been adding to. We started buying on Monday, and we've been in high levels of cash since sort of late January, early February, basically. And it was very nervous waiting for what we thought was going to unfold, but we're now in a position where we can start buying back.
I was being a bit facetious, saying that all those Ozempic users in the United States aren't going to be very happy if we start to see tariffs put on European pharma.
And it's very expensive as it is. So, and I think what's going to end up happening is I think the BRICS, I think it strengthens BRICS overall because nations will just start trying, all of a sudden the US will just become, if it's too hard, will become a secondary market. Prices may even actually come down because China will have to get rid of excess goods in other markets. And so it might be good for the rest of the world.
Well, it's so interesting because part of the reason the likes of Leitziger are so into tariffs is to bring back the American worker to onshore manufacturing. We know all of this. But to make an iPhone as cheap as you make it in China means that you won't be paying your workers a lot. So are the American people willing to work for what Chinese workers are willing to work for?
Yeah, we were talking about this off air.
I mean, they can't even, and to make it appealing for American workers, they're going to have to pay them a lot more than minimum wage. And they hate paying even, above $10 minimum wage.
What they're going to hate more is paying $5,000 for their iPhone.
Exactly.
And to be brutally honest, it's an ideology that they're bringing to an economic argument. And look, it's very easy at the moment we speak to clients from all parts of this political spectrum. And at the moment, the problem I have with it from just a completely objective point of view is there are so many holes in the plan. It's so clear that it's just a negotiating tactic. It's not a plan. So in all reality, it's not going to get forced through, but his ego will make him play chicken until. But in the
it doesn't matter because he'll tell us at the end. It doesn't matter what happened, that he won.
That he won, absolutely,
yeah.
And China will probably let him have a tiny win, but they know that they've been preparing. They've got strangleholds on supply chains. And Jonathan Takadena did a segment about 2 months ago with you guys saying basically, all of the rare earths, all of the solar, so much of the machinery, they've got a stranglehold on those supply chains. And even silica, they produce 90% of the world's silica for silicon chips. So they can stall Taiwan Semiconductors in a heartbeat. They're holding all the cards. And so I just see this probably passing, but I think the damage it's going to do to confidence means that we're probably going to see the economy in the US drift into recession we'll start getting recession fears in 4 to 6 weeks' time, and probably a second leg down. But I just don't see. I don't see necessarily a reason to panic at this stage.
Okay, there was a really interesting note out from CBA today, just saying that there is, globalization being stalled for the next few years at least. But I'm curious, if you believe that there's another leg down, why were you buying today and yesterday?
Because we're basically dollar cost averaging, and the plan for us is essentially from around about the 7,200 point in the ASX 200 was our first target to start buying, which had hit early Monday morning, and then these moves on average lasted. Well, we've done the stats on the last sort of 6 major downturns since 2000, which include 2 black swans. It's around about 280 odd days that they last from the record high to the low, which is somewhere between. For Australia, it's around late July. For the US, it's around about August, late August. So we're basically now we only put a fifth of what we wanted of our cash into the market on Monday. So obviously, an opportunity like CSL came up, which we think is a very good one. But we'll space these out over the coming months, and we're more looking at a 3-year time frame at this point, because we can probably set our portfolios up for the next 3 to 5 years. If we're just smart about the next 3 or 4 months, and then then we probably don't have to do a hell of a lot for the next 2.5 years.
So that's sort of buying stocks that are on sale like CSL, or are you also looking sort of more defensively, like we've talked to a lot of people that are looking at Coles, IAG?
Yeah, we have some Woolworths as well.
Yeah.
So we're not completely unallocated, but yeah, we'll start with the really secure names like the CSLs. Some people we've started buying a little bit of WiseTech, because I think price action's been quite positive there, because it already sold off prior to the move down. But mainly we're probably just sticking. We usually just start with the index, and then we go down to the larger caps. We probably won't be considering small caps until the second half of the year, because it's just the sorts of things that get really volatile, and I think. The valuation doesn't really matter in these markets. People just want out when they start panicking. So you don't want to be in something that's got low liquidity. You want to be in something that's got high liquidity. So yeah, we'll space it out basically. We quite like Goodman Group around here. There's been some buying in that as well. And Macquarie Bank opened at $160 on Monday as well. We unfortunately just missed that and bounced straight back up. But I think that's probably one that's worth looking at around those levels as well.
All right. Mark, thank you. As
No
always,
worries.
Mark Gardner from MPC Markets. All right, the stock of the day. Well, I guess what we've been doing this week, haven't we, has been asking people what you buy amidst the downturn. So today we had Jason McIntosh from Motion Trader and Ben Richards from Seneca Financial Solutions on the call.
With Northern Star, we've got a stock that's showing both relative strength and absolute strength in dire conditions. That's the sort of stock I'd want to be putting in my portfolio, not one which is just careering lower on the hope that it's going to find support and turn higher. If we are going to buy into extreme weakness, the only situation I would consider would be long-term dollar cost averaging into an index ETF. And I think that's likely to pay off over time, because it's highly unlikely that we'll never see another all-time high in the ASX 200.
They just had some funds under management numbers out today, and the stock was actually initially sold off a couple of percent in line with the market, and then I think some buyers have come in seeing that positive data. They've had net inflows of almost $2 billion US, which in March. So in a tough market, that's a great result. And yeah, strong inflows year to date. So that's one which we think will really benefit from a shift out of US equities into more kind of diversified global exposures, including emerging markets, which GQG is kind of, I would say, a market leader in that space.
Speaking of market leaders, let's take a look at what led this market today. And this is, of course, by percentage terms. Helios is on the list, Bapcor as well, no news. You can look at the ASX. We had a chat with Gemma Dale from NAB Trade. Huge trading volumes over the past couple of days.
Yeah, a record I think they had on Monday. All right, let's have a look at the laggards today. And we touched on why nickel industries is lower. A lot of weakness coming through in the overall materials space. Champion Iron, Mineral Resources, Alcoa and Polynovo was down by almost 10%.
Yeah, we've got just some news on BHP. We've got Deutsche Bank cutting its price target. Of course, this is in London, so taking it from $18 or to $18 from $21. And in the small to mid-cap space, taking a look at what was moving today. So Cettire, interesting to see Cettire there, but it has been so beaten down. There is a takeover play on the cards for SmartPay. And American Rare Earths, so Linus you saw in the big caps was one of the performers, and that's because China's really, cracking down on critical minerals supply. So yeah, perhaps an opportunity for rare earths in here in Australia. All right, and the laggards in the small end of town include a lot of players in the materials space as well, and Novonix, which was down by 11% to 33 cents. So tonight we get FOMC meeting minutes, but they feel horribly outdated now, I dare say. We have heard from the Fed Chair Jerome Powell since the meeting on Monday, coming out Sunday, I should say, in the US, coming out and saying that they are facing the same uncertainty that investors and business leaders are as well. And I think that's one thing we don't perhaps talk about so much, but how can anybody make an investment decision in this environment? It's just going to bring things to a standstill. And I was just reading a report that dropped from Jonathan Payne from the Payne Report, saying pretty much the same thing, that sometimes you get something called a sudden stop, a very unpleasant term, which describes how a country can experience a sudden stop in economic activity, usually caused by very large and unexpected reversal of capital flows. All right, well, tomorrow we hear from Reserve Bank Governor Michelle Bullock, which is, of course, very interesting amid these expectations that maybe we'll even have a 50 basis point rate cut next month. Of course, she's not going to give too much away, but she will be speaking. And we also get inflation expectations from the Melbourne Institute. So we will be on watch for that, but I dare say, tonight, what we're really looking out for is just what happens in markets, on markets, in reaction to what we've seen today. So that 104% tariff being placed on China, China not backing down. And so what will happen? What will happen? We haven't seen a lot of revisions to earnings expectations yet. We do have quarterlies in the United States starting in earnest on Friday. And so there's a real potential for further market carnage if you take a look at what's happening in terms of futures market expectations right now. All right, so the CBO 200 down 1.7% on the close. The ASX 200, of course, was down at one point by as much as 2%. We have fallen by 1.8% on the close, or 135 points, 7,375. And worth noting, Nadine, over the last 5 sessions, down 7% on the ASX 200. So, sniffing a buying opportunity maybe? Yeah, well, I mean, it's a question of when, right? Most people I've spoken with said you can never time the bottoms. What you need to do, keep your head on, keep us tuned in. We'll continue to bring you credible experts to help walk you through some of the different scenarios and strategies you can deploy as, all of us sort of watch our wealth, some of it at least on paper, evaporating in front of our eyes. Check your super, because we're quite a while off for retirement anyway. You're me and Nadine. Oh, decades. All right, we'll see you from tomorrow morning.